Well, that seems to be an issue which has plagued the entire diamond industry, not just in India but across the world. Latest data coming in for the 9th sales cycle alone this year. One of the largest rough diamond exporters, De Beers, has registered an 82% negative sales over its 9th cycle or the September cycle last year. It was once recording about $550 million upwards of sales, is now down to just about 80 million in 1 month. And this number is at about a third or so of what it was even at a time when post-COVID there was a correction in diamond demand. And diamonds, of course, are not forever, and that seems to be the message coming out at a time when companies and countries and consumers around the world are really cutting short their discretionary spending, as we call it. What is really going on in the world of diamonds? Well, we've got Ajesh Mehta, convener, Diamond Panel, JGEPC, joining us on this special broadcast. Hi Ajesh, thank you so much for joining us. Tell us what's really going on. Why are diamonds not glittering, not shining like the way they used to once?
Hi Z. Thank you so much for inviting me for this show. Just a little bit of recap. Last year, that is this current year actually, from last year when the war started between Russia and Ukraine, a lot of economic factors had changed. Inflation took up, went to a great height in USA. Plus, there was a high interest rates and economic issues in China. So all these factors, affected the consumption of luxury product. As you know, diamonds are one of the topmost luxury product today. So in the current year, we saw a lot of diamonds piled up in the midstream, that is in the manufacturing and the jewelry manufacturing segment. The retailers could not sell as much as they were expecting, and they overstocked in the first half of this current year, 23. So what happened in the midstream, we had to collect together, all the manufacturers came together in the month of September and decided that this is not going anywhere in a good situation. So we called for a temporarily suspension of imports of rough into the midstream so that the miners could hold back the goods for a few months. In the meantime, the midstream could get the inventory levels lower in the last quarter of 23, that is October, November, December, at the season time. And then we could then reopen so the suspension was from 15th of October to 15th of December. So this was the 2 months which we called for a suspension. Voluntary, it is definitely 100% voluntary, but most of the players have abided by it, and we saw the results. We are seeing some positive turnaround. There is stock levels have come down, and we are seeing positive signs, especially from Indian market, consumer market. Of course, US and China have their own challenges, but we can come to that later. But we are seeing this stability coming in prices of polished prices. Indian consumers are still looking for diamonds as an alternative asset class. It is definitely like gold and diamond, both are dollar-based commodities. So it is a hedge against inflation and devaluation of rupee. So these are the positive signs of diamonds. We'll hope in the next 2-3 months, things will stabilize, and definitely in some pockets, it has gone upwards also, the prices.
All right. So stay with us, Ajesh. Let me also bring in my senior colleague, Rakesh Khar, into this conversation. Rakesh Khar is the editor of News9 Mediaverse. Thank you, Rakesh, for being here with us today. So a voluntary cut in import of roughs is what is, according to Ajesh, adding to price stability. But we've seen that the story, not just in India, if you take the story global, among the biggest importers of diamonds are US and China, and we've seen there are problems with both of them. And both these large economies have cut down on their discretionary spending. And this discretionary spending doesn't seem to be coming back. So what was earlier meant to be a hedge, as Ajesh is saying, a hedge as we know has been gold, but even if diamonds were to be a hedge, they don't seem to be a hedge anymore. What's really happening in the world, and what can we expect when it comes to precious stones like diamonds and their trade to continue?
Thank you, Karthik. I think first of all, it doesn't surprise us anyone that US is under pressure, China is under pressure. US has recovered to some extent, but when it comes to luxury, I think there is a certain pattern which is quite on expected lines, and I heard Ajay say that India is a consumer market where there is still demand, which again is not surprising because India is like an outlier when it comes to consumption. But
Right.
whether it's for luxury or not, that's something that one has to see whether it will sustain. Globally, I think this particular sentiment will persist for some more time, and people are really holding back on cash. That is the sentiment when it comes to mega ticket spending on luxury items.
All right, so people are going to hold on when it comes to spending on ultra luxury items, Ajesh, but we are seeing that there is still a fairly long road to recovery. Even the US has kicked off its recovery process and consumption has kicked off. Some data coming from China suggests that even China is on a recovery path. But that data, of course, is made in China, so we don't know how much to trust that data. But in your industry circles and the suppliers that you speak to on an everyday basis, what is the kind of sentiment? I understand that this voluntary cut in import of rough is only till 15th of December. But are we hopeful that post 15th of December, we will see demand shoring up?
Actually, last quarter for USA in terms of diamond jewelry sales is the best for any part of the year. And the last 5 weeks, that is from Thanksgiving to Christmas, that is the gifting season. And the diamond jewelry is the best gift. I mean, historically, we've seen over the years that it has been one of the best gifts they've ever been given. So we are optimistic, and when we talk to our retail partners in USA, they are quite positive in their approach because the first half was a really bad signals they got from the retail front because, of course, economic issues, inflation and interest rates and all the other factors we all know about it. So this they are stocking goods. They have kept it on ready for sales, which is from they're hoping from the last week of November till Christmas, they'll do a fairly better sales compared to the full year. So that is one area. And when you talk about China, there is, of course, we all know the Chinese economic issues, but there is some positive sign. Chinese New Year coming up in the month of February. So there will be pickup seasons, purchase season coming up in November, December for the Chinese retailers. We see, of course, there is the issue over there is the price ticket. The retail price ticket has dropped. Consumers are buying smaller diamonds in China, not the larger ones below about 50 points 1 carat, which was before a couple of years. They've shifted their trends and their pattern to smaller diamonds that is 30 points and below. So we see some movement in that area, but of course, China is struggling since a couple of years. We hope things turn around by the end of, first quarter of next year. So there should be some positive signs. So along with this, there are some new growth markets which we are already trying to partner with and market there, such as Vietnam, Cambodia, Thailand, Latin America, and Myanmar, and all these Southeast Asian countries and South America. So these countries are the new, the new rich class. It has come into play, and they are looking for diamond jewelry as their aspiration, or even to just flaunt their wealth. This is which was India before, say, 20 years, or China before 20 years. So we could see a new China, a new India in 10 years from now in one of these countries going forward.
All right, Rakesh, you have a question for Ajesh?
Hi, Rakesh here. You
Hi,
talked about
Rakesh,
you talked about an uptrend in India, and I was going to ask you about the emerging bloc. US and China we know are in a bit of a dark spot, but within the emerging bloc and India specifically, what are the numbers looking like? Is there a certain trajectory? Can we quantify them from last year to this year, or pre-COVID to the current levels?
So pre-COVID, of course, there was one number, but post-COVID, when the US, especially in US, when there was a lot of money into circulation and there were no holidays or no travel allowed in 2020-21, market grew 20-30% in USA in the last 21 and 22, this period. Okay, post the war with inflation and all the other factors, we are seeing correction. There will be a 10% drop in US consumption in retail segment. Or maybe 10 to 12% this year. We don't see, but when you compare the numbers to 2019, they will be definitely above that number.
So when you forget about India, Yeah, I was asking
Okay,
specifically
sorry.
about India and the emerging bloc. You know, in the emerging bloc outside of India, who is the leader and who is the laggard?
So, okay, the leader, definitely India today, because the economy is quite resilient against the economic, global economic factors. Still, India is still doing the best. There is demand, there is gold purchase, and along with gold purchase, a lot of diamonds are also consumed. And 60% of diamond jewelry is sold in terms of wedding jewelry in
Right.
India, especially. So that season is coming up in October, November, December. November, December, January, February. So this season is, it's the biggest season, and the economy is doing fantastic. You see the stock market, you see the real estate, everything is doing great for India. So this is by far the leader. Other the laggard you see as China economic factors, and their focus, or the consumer focus, is moving towards gold jewelry and smaller diamonds because their budgets are smaller, getting shrinking, and they want to save money. They have money, but they don't want to spend it on luxury today because, as you just said, they have the power to purchase, but they are waiting for, they don't want to spend it right now.
Okay.
So they are holding back the money. They're spending either on gold, which is readily cashable, easily cashable. So that is that factor. Other growth markets, as I said, Vietnam, Cambodia, Myanmar, and some small countries like Laos or Indonesia or South Korea. These or Latin America. So these are the new emerging markets which I talked about. And
Right.
we can see one of them be China or India in the next 10 years
All right, 10
for
years is
diamond
a long
consumption.
horizon, but Ajesh, talk to me about
Yeah,
present
yeah,
day.
but
With
see,
these,
I know, but the size is quite small. So
sure,
these
sure.
countries
No,
are,
I want to specifically understand from you what is happening on the shop floors in Surat right now with this rough stones import being restricted or almost banned for 2 years, and India, of course,
2 months.
being
Yeah.
the real destination for cutting and polishing of diamonds, and now, of course, a demand slowdown that we all know of. What is really happening on the shop floors of Surat, and is there some distress signs that you can see right now in your conversations with the traders?
Yeah, so you are right. We said lack of demand in US and China, inventory piled up in the midstream. We called for a suspension, voluntary suspension for 2 months, October 15 to December 15. So in this 2 months, 1 month is a Diwali period, which normally is a break for Surat, where the
All right.
workers go back to their hometowns for 2, 3 weeks easily, and they come back and slowly start off the factories. So we chose this period very aptly because it was falling in the Diwali break, and so that the message goes worldwide that okay, we need to stop discounting goods and
Right.
stop bring in stability for the polished prices.
Right.
So that has already started kicking in, and so the workers are not disturbed. Every worker was paid in the month of October before Diwali.
Yeah.
These 3 weeks, anyways, it is shut, so they are not being paid. I mean, that is the normal, whatever the norms are. They
Right.
are being paid the minimum rates. And then coming December, we will open up factories because there is some inventory of rough diamonds for the beginning of the December.
Right.
And we will call for a meeting in the first week of the trade meeting to
Sure.
decide when to open. And I mean, the hope, we are hopeful that we will be opening by 15th of December. So there won't be any issues for the workers
Okay.
to get back the rough.
Okay, my
So,
final question to you, if the war in the Middle East as it goes on right now continues to rage on, which seems to be the case and a likelihood right now, and Israel again being another source of both importing roughs as well as exporting polished diamonds too, if the war continues, how grim a situation are we looking at?
okay, Israel is a big part of, and it used to be a big part earlier, but quite a substantial part today also for diamond industry. They are mainly into larger goods. They have a good cutting and polishing facility. But India has, of course, taken a lot bigger share of the diamond cutting and polishing. We export maybe 1 billion plus, well, that is 5% of our polished diamonds to Israel. Israel is not a big consumption market. It is more of a trading hub and a small cutting and polishing center. So it will not affect the consumption side because the main consumption is USA, Belgium, Europe, all the other markets, not Middle East or that is the area around Israel, not
Okay.
that part of the world which is a big consumption, has consumption of diamonds. So it won't impact as much. Of course, it is sad to hear this war is still continuing and it is, disheartening. But for diamond manufacturing, it won't impact as much as we
All right, Ajesh Mehta there. Thank you so much for joining us. Ajesh trying to be as optimistic in this scenario as possible, but let's just hope that numbers also tally with Ajesh's assessment. We'll have Ajesh Mehta back as soon as we have clarity on whether this ban continues or whether there would be a lifting of this ban on the 15th of December, as soon as the council is able to meet with the traders and decide on that. But for now, Ajesh, thank you so much for joining us. But let's move on.
In fact, Karthik, before you move on, there's an interesting tale I remember just suddenly when Ajesh was talking about the positive sentiment in Surat, despite the headwinds. We do remember those heavy-duty Mercs and big-ticket SUVs being distributed as Diwali gifts. That's history for now.
That is definitely history for now. But with your permission, let's move on.
Yeah, sure. I just thought that it's important to put it in context.
And there is strife, of course, in the world as we know it. But even in our immediate neighborhood, there seems to be a strife. And this strife is right on the eastern side border of India, within Bangladesh. And Bangladesh, of course, being among the world's largest exporters of textiles and fast fashion products, including the likes of Levi's and H&M and Zara. And there seems to be a strife in Bangladesh now. And why is this strife on? The strife is on primarily on account of low wages. Factories employ mostly women at a fairly low monthly wage of just $75. And women and factory workers across Bangladesh have taken on to the streets in protest. And they're protesting that their salaries need to be corrected, their wages need to be corrected. Now, last month, the government of Bangladesh did increase the wages from $75 to about $90 or so a month. But Bangladesh factory workers in the textile and garment sector not happy yet with that hike and are looking to take it up about 3 times to over $200 a month. Just to put this in context, minimum wages for semi-skilled labor in a country like US are as high as $10 per hour. So what a US semi-skilled laborer can make on a shop floor in a day is what workers in Bangladesh are making in a month. Just to put this more in context, in a country like India, factory wages in the textile sector are in excess of $200 a month. In fact, a little short of $200 a month. Whereas in the case of China, which still continues to hold a lion's share when it comes to textile manufacturing, it has breached the $200 a month to about $214 a month. What is really holding back the Bangladesh government to increase the floor price on minimum wages? Let's try and make sense of that with Emmanuel Hafiz Latifi, trade and policy economist from Bangladesh, joining us live on this broadcast. Hi Emmanuel, please tell us what is really happening, what is going on in the government circles, in the trade circles, in the factory managements at Bangladesh right now. What is holding back increasing the wages to a threshold that the workers demand and feel is their right, given the almost double-digit high inflation we've seen in Bangladesh?
Right, exactly. Asked the question. So basically, the thing happening is that here actually, the workers have demanded a high raise, which is not actually perceived to be very consistent with the increment of the wage over the years that we have seen in case of Bangladesh, and it is the perception of the factory owners that the wage growth should be limited to 8 to 10%. But as you have already mentioned, that the government has already published the gadget to make up an increment of almost 55.6% wage growth of the garments workers, and but the workers have demanded to increase it by almost $208 per month, and the demand has not been fulfilled. And we rightly addressed that the inflationary pressure in Bangladesh, which we're observing at this moment, due to some external shocks and internal revenue collection, you can say mishap is happening over here. So that is why the resource allocation part of the country like Bangladesh is very much can be blamed for that reason. And the inequality situation of Bangladesh, that can be also addressed as a reason for that demand. And overall, for the government's factories and the government's workers and the owners and the business community circles you have asked already, the feeling is like that for the factories to run properly and to remain competitive at the global market, as the natural resources which are required by the factories are disrupted, so they factory owners try to offset that disruption cost by the by addressing the and by offering the lower wage to the laborers of Bangladesh.
All
So
right,
that
Emmanuel.
thing, yes, that thing actually should not be sounding that much rational from the point of view that the workers are not even getting the living wage level. So at that point, Bangladesh government tried to intervene and tried to negotiate between the government workers
Right,
and
and
the
that
government owners.
negotiation, of course, as we know, Emmanuel, is still on, and even the 55, 56%, Rakesh, let me bring this conversation to you. Even the 55, 56% wage hike does not cut it, because there has been double-digit inflation in Bangladesh. Now, Bangladesh, I believe, is at this cusp right now where it needs to obviously concentrate on the fiscal prudence, and hence increasing the wage price, the floor price of wage workers is going to make a dent when it comes to the profitability of companies, and hence their competitiveness in the global market. But if it doesn't do that, then there is a strife ongoing. So one way or another, some sort of a negotiation will have to be and a conclusion will have to be arrived at fairly soon if Bangladesh wants to continue being one of the leading textile exporters to the world. Because if the prices go up, then obviously countries like China can be looked at again, countries like Vietnam, Thailand, India, Sri Lanka. We have a whole bunch out there. So what are the options available for the government of Bangladesh or the factories of Bangladesh to do?
At the macro level, Karthik, first of all, it's bad news for Bangladesh, it's bad news for the subcontinental economy, and it's bad news for India as well, because, you know, having neighbors who are extremely vulnerable in the fiscal situation is not good news for India.
Okay.
We know about Sri Lanka, now Bangladesh also adds to that list. Bangladesh has really had a, successful story when it comes to exports, and that again is driven on the rise of the textile industry.
Correct.
They don't have too many industries to talk about to the external world, textile being the mainstay.
28% of the GDP, Rakesh, about
Absolutely,
$55 billion
right.
worth of
Yeah,
exports.
and we are all
28%
proud of that
Bangladesh's
success
GDP.
story that Bangladesh have had. But with inflation eating the vitals of the economy inside Bangladesh, and the inability of the government to raise, wages, is a challenge that both the industry and the government have to be seized of. I think, and also we must be cognizant of the fact that Bangladesh is going for elections, and it's a politically labor reform is a big challenge across the subcontinent, and a comparison next door, a comparison at the global level becomes an imperative. So when a laborer in Bangladesh asks for a certain parity, he or she is right within his or her rights in asking for that. But does the P&L of that particular company support that in the current context? It might not be supporting that. So the only way forward in this case is the government has to bite the bullet. And government has to bite the bullet from many perspectives.
But if the government bites the bullet, Rakesh, and if wages were actually to be increased, then the profitability and the margin and the cost at which the textiles are produced at factories in Bangladesh will cease to be competitive. And hence, whatever advantage Bangladesh has right now when it comes to cost goes away. So in any case, at one level, you may be able to sustain higher wages only up till a point that it balances the trade advantage that it has on low prices. So it's a fairly tight rope, and I think if you ask me, it's a punt that Bangladesh had taken to employ people at mass scales at reduced cost, offer them employment for sure, but now it's unable to make sustenance out of it.
See, there's no template to learning globally in terms of sustaining the cost advantage. India is facing this problem in the IT sector. There are new emerging economies. India tried going to tier 2, tier 3, tier 4 cities and had a cost advantage there. But do you sustain that repeatedly? Is there a possible way of, finding a cheaper labor in Bangladesh? But it's a small country. You don't have tier 3, tier 4 cities where you can locate these factories.
Right.
So, first and foremost, in an election year, in a politically surcharged environment, it is important. I mean, to my mind, the Bangladesh government would focus on managing the labor expectations at the cost of losing the economic advantage vis-a-vis the global markets.
All right, Rakesh, thank you so much for joining us. Emmanuel, sorry, that's all we have the time for. Let's hope some sort of a consensus and the tightrope that the Bangladesh government has to walk results, of course, at parity at some level when it comes to fulfilling the demands of the wage workers, the factory workers, and at another end, not losing its cost competitive to the bully in the neighborhood called China. With that, it's a wrap on Business Plus. Thank you so much for joining. Do stay tuned to News 9 Live. Thanks for watching.